Everyone, I'm Ankit and you're watching StudyIQ IAS English. Now, if you remember the lecture 1, we covered the difference between a central bank and a commercial bank. And in India, the role of a central bank is discharged by the body known as Reserve Bank of India. Now, the Reserve Bank of India was established in 1934. But what used to happen before 1934? That becomes very important if you have to understand how the policies with respect to central bank has changed in India, or how has the institution of RBI has been set up so as to deal with the challenges that existed before what used to happen before the RBI was set up, right? So let us understand first the evolution of RBI. Now we'll cover the evolution of RBI based on certain important developments that happened before RBI was set up in 1934. Now the first thing or the first development that comes to my mind is the development that happened in 1770s. Can anyone guess which was the organization at that time responsible for printing of notes? No, right? There was this organization, a private organization set up by none other than East India Company, known as Bank of Hindustan. And this bank, a private bank for that matter, was responsible for printing of notes in India. Who prints the notes right now? RBI. But who used to print notes in 1770s? That was a private bank set up by East India Company, as that same company who was ruling over us, known as Bank of Hindustan. Now something changed in the first decade of 1800, that is in 1806. Now what happened? That a Presidency bank was set up in the territory of Calcutta. At that time, Kolkata was called as Calcutta. Similarly, later on, this kind of a bank was set up in other major provinces as well. Can you name the other major provinces at that time under British rule? The province of Bombay as well as the province of Madras. Now, the ownership of these Presidency banks was not completely private. These Presidency banks were partly owned by British government. So, the body responsible for printing of notes before Presidency bank, they were completely private in nature. Now, Presidency banks, they were partly owned by British government, and the responsibility given to these Presidency banks was that they were made responsible for printing of notes. So there were three Presidency banks: Presidency Bank of Calcutta, Presidency Bank of Bombay, and Presidency Bank of Madras, who were responsible for printing of notes in their respective jurisdiction. So can you identify one of the problems that might have happened due to these three Presidency banks? Is that the notes that they were printed, their applicability were very limited. So the notes that were printed by these three respective Presidency banks, their jurisdiction was very limited in terms of applicability. Now it is very easy for you to understand this. First of all, if RBI prints a note in India, it is accepted in Kashmir, it is accepted in Kanyakumari, it is accepted in Kohima in Northeast, and it is accepted also in Kutch in Gujarat. So this means that the RBI, which is the only body responsible for printing of notes in India, its notes is accepted all throughout the country. On the other hand, in 1806, when Presidency Bank of Calcutta was set up, and later on when other provinces had their respective Presidency banks, they were responsible for printing of notes, but their notes were only accepted in those areas where the Presidency banks had their jurisdiction. So, for example, if you were a trader moving from Calcutta to Madras, the notes that you would be carrying in Calcutta were not acceptable in Madras. Similarly, vice versa, and with respect to Bombay, these were also true. So this was the problem faced by British government, even though they set up an organization which was partly owned by them, who were responsible in printing of notes. So to deal with this problem, in 1861, the British Parliament came up with a solution. And this solution, which British Parliament came up with, was known as the Paper Currency Act. Parliament, right? So this British Parliament enacted a act known as Paper Currency Act of 1861. Any idea what this Paper Currency Act did? It made two important changes. First of all, it said that it is British government. It was the only organization, or it was the only institution which had the complete monopoly over printing of notes. And the second obligation that this act laid down was that it established an agency known as Controller General of Currency. That this Controller General of Currency is the only organization from 1861 onwards who is responsible for printing of notes. So I told you one of the biggest problem that the government faced after 1806 was that 3 different presidency banks were responsible for printing of notes. And as a result, the notes that they printed had very limited applicability or acceptance in the other province or in the other provinces, right? So to deal with this problem, the government made, first of all, British government completely or the only authority responsible of printing notes, and it started a new agency whose only job was to print the notes. Understood? So this made one agency, Controller General of the Currency, which was owned by British, as the only organization who would print notes in India. Right? Now the next big development, it happened in 1921. Can anyone guess what happened in 1921? Sorry, not 1921, but 1924. Now in 1924, sorry, let me get back to you. It is 1921. Now what happened in 1921? Can you guess? Now what happened? I told you in this, in 1806, there were 3 presidency banks. Presidency Bank of Calcutta, Presidency Bank of Bombay, and Presidency Bank of Madras. So government decided to merge these 3 presidency banks into one entity. And can you guess the name of this entity? The name of this entity became Imperial Bank of India. And after independence, this Imperial Bank of India was nationalized, and today you know this organization by the name of State Bank of India. So it is the Imperial Bank of India, which was formed by merging 3 different presidency banks in 1921, and this organization was made responsible to act as banker to the government. Now central banks normally, that is RBI in India, has many roles. One of this role includes printing of notes, and another role includes acting as a banker to the government. So suppose if bank or if the government needs loans, it can approach RBI, right? So this is the role of modern central banks. But in 1921, Imperial Bank of India acted as a banker to the government. But did Imperial Bank of India print notes? No. It was the Controller General of Currency who was responsible for printing of notes. So this role, which is discharged by one organization, that is RBI today, it was discharged by 2 separate organizations known as Controller General of Currency and Imperial Bank of India. Similarly, this was another problem, that one organization is responsible for printing of notes and another organization is responsible for acting as a banker to the government. So in 1924, Britishers decided to set up a commission. And the responsibility of this commission was to find a solution to this particular problem. And this solution or this commission is very important from your exams perspective. This commission is called as Hilton Young Commission or Hilton Young Committee. Can anyone name the official name of this committee or this commission? This committee was also called as Royal Commission of Royal Commission on Currency and Finance. Royal Commission on Currency and Finance. I hope you are all writing this down because this is very important. Now, any idea what recommendation this Hilton Young Committee gave? Any idea? Now, there were certain important recommendations given by this committee. And please remember them. This is very important if you have to understand how RBI is what this is today. Okay. Now, it gave certain recommendations. It stated that a body should be set up known as Reserve Bank of India, and this should be set up as a statutory body. Anyone, what is a statutory body? Any guesses? Any body which gets its power from an act passed by the parliament, that body is called a statutory body, because acts, another name for acts is also statute. So anyone getting its power from a statute becomes a statutory body. Similarly, it wanted RBI to be set up as a private shareholders bank, not as a government bank, but a private shareholders bank. So this was one big development. Today, RBI continues to be owned by Government of India with as much as 100% ownership. So this, at the time when it was set up, it was not a government bank, rather it was a private shareholder bank. And it recommended that the total share capital of the RBI would be how much? Would be rupees 5 crore. So 5 crore in 2025, you might think it is a small amount as far as RBI is concerned, but let us imagine or let us understand the year at back that time was 1924. So in 1924, it was recommended by which organization or which committee? Hilton Young Committee, that you have to set up RBI as a statutory body. The kind of ownership that RBI would have, it would be private ownership, it would be a shareholders bank, and the maximum amount of share that can be made public was 5 crore rupees. So the total share capital of RBI at that time was 5 crore rupees. So based on this recommendation, in 1934, the British Parliament enacted what was known as the Reserve Bank of India Act of 1934, and this allowed for RBI to be set up as which kind of body? As a statutory body, because this is an act passed by the British Parliament, right? Now, this was the act which allowed for setting up of the RBI, but RBI started its operation from April the 1st of 1935. Of 1935. RBI existed, or RBI started to be established. So on April the 1st, 1935, RBI was established. Understood? Any doubts? So this was how RBI came to be established. Now, one big development happened, that is in 1949. Now, this was the year where RBI became nationalized. Any idea what nationalization means? Now, whenever the ownership of any company is given from government to private, that is called as disinvestment, or this is called as privatization. If opposite happens, that the ownership of the company transfers from private hands to government hands, that process is called as nationalization. So from 1949 onwards, Government of India is the 100% owner of RBI. Understood? So this is how RBI has evolved from the time there used to exist a Bank of Hindustan to a time of 1949 when RBI has become a nationalized bank. Now the next part of this topic is the objective of RBI. What does RBI wants to do on a bigger scale? Now this objective you have to study based on the year before 2016 and after 2016. Now, any idea what was the objective of RBI before 2016? RBI had basically three kind of objectives. First, including printing of banknotes. Second, any idea what might be the second objective of RBI? It was ensuring price stability. And third was promotion of growth and development. So third objective of RBI was promoting growth and development. Now, any idea out of these three different objectives, what does RBI prioritize? No idea, right? So this was also a problem that the government faced. This was also the problem that RBI faced, that there was no clear priority, or there was no clear priority based on which RBI used to prioritize its objective. So government RBI faced this problem that there was no clear priority out of these three objectives. What would RBI follow first? So suppose if RBI ensures price stability by increasing the repo rate, this has a negative consequences on the growth and development of economy. But what if RBI pursues economic growth and development? This would mean reducing the policy rates, and the consequence of reduction of policy rate that it will increase the inflation. So RBI had no clear priority which kind of an objective which it would follow. So whenever government or any body faces a problem, please remember one thing: it sets up a committee, and it is the role of that committee to find a solution to this predicament. And any idea which committee might have been set up? The committee was called as Urjit Patel Committee. Yes, this is the same Urjit Patel who was the previous governor of RBI, and when this committee was set up back in 2016, Urjit Patel at that time was one of the deputy governors of RBI under Raghuram Rajan. Now, in 2016, this Urjit Patel committee came up with a report. It stated that you need to amend what is known as RBI Act of 1934. And in this amendment, you should make changes in the act which would state that the objective of RBI would be that it would ensure, or RBI must ensure, price stability, while keeping in mind the objectives of growth, while keeping in mind the objectives of growth. So this was the amendment, or this was the change introduced in the RBI Act by amendment of the Act based on the recommendation of whom? On the recommendation of Urjit Patel Committee. So if you read the statement, what do you know is the primary objective of RBI now? RBI must ensure price stability. So the primary objective of RBI is to control inflation. while keeping in mind the objective of growth. So growth becomes the secondary objective of RBI. Got this? So from this discussion or from this amendment made in the RBI Act based on the recommendation by Urjit Patel Committee, we now know that the primary or the first priority of RBI would be to control inflation, and then only it would take care of the economic growth. Got this? So the problem that government faced before 2016, the problem that RBI faced before 2016 was that it was not able to understand what its priority is. And this solution was made by amending RBI Act, by introducing this line which states that RBI must ensure price stability while keeping in mind the objective of growth. Understood? So this is how the objectives of RBI has also evolved before 2016 and after 2016. Now, which are the two most important committees that we have covered? Urjit Patel Committee is the first committee which amended RBI Act to introduce the primary objective, and second committee is the Hilton Young Committee which recommended that RBI should be set up as a statutory body. Understood? So this is what is important from our today's discussion. Understood? So this is all for our today's session today. We'll see each other on Wednesday again at same time at 6 p.m.